Good afternoon, my name is Jordan Lambert, market analyst at Gelatama Management. Finally, gold has bulldozed its way through the mighty 1400 resistance level, although it did dip back below this level after Italy's borrowing costs increased in a 10-year bond auction. Although the uptrend did resume itself, helped by a slightly downwardly revised US GDP number that weakened the dollar against most major currencies. Japan's stimulus program is paying dividends, evident in the industrial output that was released this morning. That was double analyst estimates, which has also been providing a bit of support for gold. Let's just take a look at the charts. This is a 30-minute chart. We can see that we have quite an established uptrend now. Just be aware that although we are in an uptrend, the RSI recently went above 70 and has since just dipped back below. That could signal we might be seeing a pullback. But if you aren't in this upward trend at the moment, maybe you missed the burst through 1400, it is more than likely we'll see more advances. Now we have broken through 1400 as the bulls build more confidence. Therefore, look for a pullback and join the crowd, because it is likely we'll see more gains. So maybe a pullback towards this bullish trend line, which is this red line. So look for opportunities around there. Do be aware that if we break this trend line, that will show a weakening trend and possible more range bound activity. So be aware of that. Fibonacci retracement levels are also useful to establish the strength of a trend. If price does retrace and moves through either 50% or even worse, moves through the 61.8% Fibonacci retracement level, which is about 1397.5, then that would signal that the upward trend has lost momentum, and more range bound activity is likely. And also going through this what was formidable resistance at 1400, dipping back below that would not be a very good signal for the bulls. It would be more bearish if anything. So do assess the strength of a trend by whether it breaks the trend line and also whether it goes back below the 61.8% retracement. That will just signal that it is quite weak. But hopefully we will see more advances as price bounces either off the trend line or maybe the 38.2% Fibonacci retracement level. Usually strong trends bounce off the 38.2% retracement. So that's stuff to be aware of. This morning we have seen minor resistance at around the 1420. It did make a high of 1421 before dipping back below, and this was because it was a former support back on the 10th of May. It was quite a strong support earlier in May until it was broken, and that actually led to some steep declines for gold. So now, very often this happens, former support then acts as resistance, and we are seeing that now. But I believe it will only be minor resistance. So if we can break through 1420, target levels would be 1445 as a short term, and then a medium term target of 1488, which if I show you on the daily chart, would complete the neckline of a double bottom. So this green line here is the 1488 target level if 1420 and 1445 is surpassed. And if that is completed, then yeah, it's a very nicely shaped double bottom, and then the target level would be 1500, which intersects with the overall bearish trend line shown by this red line here. So around, based on the rate of appreciation, it's all very much about guesswork, but based on the current rate of appreciation, maybe a few fluctuations. If we get a completion of the neckline at 1488, yeah, we might meet the trend line around 1500, which naturally and psychologically would act as a resistance level. But now we broke through 1400, the bulls should have more confidence that we will see a correction in this overall bearish trend. Economic data to watch out for today is German retail sales at 2 p.m. and at 8:30 tonight we have US spending and income data, so trade accordingly around them numbers as well. Thank you very much for listening. Speak to you again on Monday.